Coming up, a punk rock inspired episode of Plugged In. This tech focused one with Hans Morris, the managing partner of Nyca Partners, a fintech VC in New York and San Francisco. So, together with my main man, Steve Williams, out in Scottsdale, Arizona.
How's it going, Al?
Well, I'm Al Dominic, holding it down in our nation's snowy capital. First snow of the year came through the district, and I had to open my window so you could actually see this is happening. But we're going to have a great conversation today that builds off of recent ones with bank CEOs like Dave Brager from Citizens Business Bank, David Finley of Lake City, Jeff Jackson from West Banco, Nitin Mhatre from Berkshire. Steve, all of those conversations brought to light various interests and really opportunities to leverage technology tools in some pretty meaningful ways. Did those strategies kind of call to mind other conversations we've had with folks like Chip Mahan, Brent Beardall, and Kevin Blair?
Absolutely. But today I like to say I'll follow the money. And I think for our bankers, understanding what's out there in the ecosystem, in the VC world, in the tech investing world, folks who are going to partner but also disrupt banking. It's great to have Hans here.
Totally agree. And, as much as we learn from great bank CEOs, it's an opportunity for us to cast a wide net and get some perspective from somebody who has been doing some really cool things.
Yeah.
Steve, I know we love stats, and Hans, you probably have heard Cornerstone, talk data in the past, but let me throw this one out for listeners. Nyca has over 80 active investments and is currently investing from its fourth fund. And so in addition to Hans's regular day-to-day job, I believe you're still the chairman of the board of Lending Club.
I am, yeah.
And on the board of several private companies, which I had noted as like SigFig and Thought Machine, Centrelink, Fidel, and some others.
Yep.
Right. So you're just bouncing around doing different things. But I mentioned that Hans, is joining us for a punk rock inspired episode. And I have to disclose to you guys, he's also a huge wine connoisseur, as is Steve, as am I. I pulled, to prove this, a bottle of Costa Stanel from my birth year of 1976.
Wow.
It's empty, so we can't share it virtually. But you're keeping company with some folks that love a good vineyard, but we also happen to love some good vinyl. So your friend Nigel Morris at QED was the one who kind of hooked Steve and me up on this one, that a lot about punk rock. And so we're not going to split hairs and go.
You can see it in the background here. Your listeners can't see it, but that's a picture of Paul Simon from The Clash there.
Ooh.
And then that's Tom Verlaine from television and Patti Smith. And then James Brown, who's the godfather of soul, but he actually a lot. I mean, in the late 70s, 80s, you'd see. I saw James Brown at a very small club in New York, the Ritz, right after he got out of prison.
See, now this is why you have to tune in for Plugged In, because you'll never know that this type of excitement exists in the hallways. What's funny about you showing those posters is I pulled 5 different bands thinking they could have some lyrics that inspire it. The first one I pulled was The Clash. I also looked at the Sex Pistols, the Ramones, the New York Dolls, and the Stooges.
All right.
So you got a good group. Yeah. I'm hoping that mine's okay.
Yeah.
Steve, when you were a boy, you used to take a walk into the music store. Are those ones going to resonate with you?
Oh, absolutely. And it feels a lot of good New York vibes, some connection to London, but a lot of good New York there in your list.
Well, let's kick things off and tell some stories. So Steve and I were out in Chicago a few months ago, and we heard Hans speaking with Nigel, and Nigel basically teased up a Visa story and a lollipop story, and it's an acronym that Hans created, and I had made some notes. I can't remember the exact details, but I'm really hoping that he can remind me of what he was talking.
Well, in the 2007, 2008, as really when smartphones were coming out, you had, I would say, an unlimited stream. It also coincided with the Durbin Amendment, and so there had been a increase in merchant funded rewards, and then that suddenly got uneconomic with the Durbin Amendment for debit cards. So people, all kinds of entrepreneurs came up with ideas around having your smartphone and being able to push things to you in a given location, and having being able to combine search what you were searching for online with what your payment history was, maybe social incorporate social media likes when your birthday is. And so I would see some new idea every week, sometimes several a week, and I got sick of it. And I said I came up with an acronym which tried to encapsulate all of them, which was Lollipop. Stands for linked offers, likes, loyalty, incentive, and promotions on payment systems. So that's Lollipop. And I've been using that now, and we're on a probably, I don't know, probably the third or fourth wave of new ideas. And one of the things I would say, I think I said at that meeting, is it's a lot harder to do it than it looks. Easy to make a video about how it could work, very hard to make it all come together in a way that actually makes it really, really valuable to you and to the merchant versus just spam. And so that, and I actually do think, and we invested in a company called Point.me a couple of months ago, which I think is an example of like newer strategies incorporating. There's a lot more data, and there's also, I think what's important is focusing on making it extremely valuable to to the consumer, while also making it extremely valuable to the provider of the reward, is quite complex. And we could probably spend the whole podcast talking about this, but I do think there's some reason for optimism that some things are getting.
Interesting.
Very cool.
Steve, what do you think is as you hear all this? It's kind of a smarter bank concept comes to life.
Yeah, I couldn't agree more, though, that all the people trying to say, now I'm going to embed this in a merchant and payments and network ecosystem. And then for banks, I'm going to have to embed it somehow in all these mobile platforms. So it's kind of like Elon Musk saying, no one understands how hard the manufacturing process is. I totally agree with concept. No one gets how hard that concept is to embed in an ecosystem.
Yeah, and I'd say one thing a couple of lessons we have on this, if you just want to make a few points, and one of the reasons we like Point.me is certain things Google is not good at all. And I'd say, for example, you want to go to Paris, let's say, and you want to fly business class, and you want to see what are my real options, what rewards programs do I have, and what's the most efficient way of getting there. That's a pretty complicated equation, and what you have to have a trusted. Am I willing to tell some application a lot of information or not? So I think Points.me figured that out, and also figured out a way to do it that incorporates the carriers into this, makes them want to share a lot of information too. And if you don't do that, what you get, do you remember Gresham's law from economics about bad money drives good out of circulation? That's basically the problem you have on a lot of the existing models, which is if it's merchant funded, they don't really want to give things valuable, so they give stuff away that doesn't really mean anything to most consumers. So that's the tough nut to crack. So anyway.
No, thank you. Again, I probably could have used some music to tee that one up, but I certainly will for this next one. Because I mentioned the Clash, and they've got a song, Train in Vain. And there's a lyric that says, tell me something I don't understand. And so I'm going to apply that ask to, really what's happening in the AI space, broad catch-all. I mean, we should probably be more specific and talk, generative or, chat or RPA. But, it seems that anything customer service oriented has humans deeply involved. It's something that Steve Williams and I have been paying a lot more attention to. So companies like Klarna, who are doing now buy now, pay later deployment at scale really has our attention. But from your investors' lens, where are you seeing companies gaining traction?
Well, as you said, there's big differences under the category of AI. So if people think about the progression between like regression based models, where you take up to several multivariate regression, but where, as models start breaking down as you incorporate more and more variables in them. So that's gotten pretty far, but there's limitations to that. And then machine learning, which enabled you to create much more, build models with many more variables in them, and the machine would really figure out what are the best correlations within the a wide range of variables in a data set. And then that, and then you're more sophisticated. I think supervised machine learning would be another standard, which has become pretty, lots of banks are using that. And I think all of this has to be in the context of, if you're a regulated institution, if you're a bank, the model regs, which originally came out in 2016, are very specific about what you need to do to incorporate any model. And there's like requirements that you have. And importantly, even if you're using a vendor, you have to supervise that vendor. You have to know what that vendor is doing, how that model works. So when you incorporate generative AI, which is now, obviously everyone is talking about it, it creates some very exciting ideas. And again, it's a little bit maybe like the videos that we saw in 2008 about how you could, use smartphones, incorporate a lot of data and payments data and create an incredible experience. It's harder to do. And I think it's hard to do in certain, particularly in customer-facing applications where there's going to be a lot of sensitivity about it because it involves money. And if, for example, if I'm telling you how to invest your money and I'm right half the time, you might say, well, that's, not very good. If I'm marketing, if I'm doing marketing and I, 50% success rate, that could be actually very good. So things that are acceptable in one standard, like e-commerce, for example, is not acceptable if it involves money, and particularly if the activities themselves have very specific requirements today. Saying, well, AI will get me most of the way there to meet those requirements, that's not acceptable. And analogy I use a lot is self-driving cars, which is like you can make it very good. You can make it maybe better than humans, because humans make a lot of mistakes and have bad incentives when they're making investment recommendations to you too. But it's still, we need to meet the requirements of existing regulations. I think that's to me very clear. So what are some examples where you could put it into production right now and where people are, and where I think you can be quite optimistic about the even near term benefits of this? One, as you pointed out, is sophisticated customer service, where you have a human who's responsible anyway. So I'm talking, it's going to humans could be in this loop in many cases, but can I allow that machine assisted human to be a lot smarter, including speak any language, for example, and incorporate many complex decisions. If you think about how frustrating asking a lot of website students that can do, how can we help, chat here, and how frustrating that often is, those machines are getting a lot smarter and will get much smarter. So that is clearly a very, very powerful application. And it's not, you have to test it just like you test script in a call center today. And you do assessment of how well your customer service people are responding to customers' questions. You want to make sure you're monitoring complaints. So all those things are going to remain part of your requirements. I like putting this in the category. So what's in production right now is meeting summaries, like lots of businesses do it, like internal, like make you smarter, do things faster. We use that all the time now here too. And I think coding is another application, which everyone is saying it can be up to, dramatically improvements. But one thing that's actually coming out of the data now is it makes really good coders more efficient. It doesn't make bad coders more efficient necessarily. And that you still the same supervisor, you have to test the software. And so it makes that, if someone's not good, it's not necessarily going to have the same dramatic efficiency as you can when you have really good coders using this. And the other thing, another summary I would tell people, if I'm your listeners, is focus first on making expensive people more efficient. And so if you think about, you have lots of expensive people, for example, in wealth management, there's no question that generative AI can assemble documents effectively, interpret what that customer is seeking to do, enable your workflow to be much more effective. So make things more seamless for the expert person who's expensive and make them a lot more efficient. And I think that's quite promising in business banking too, helping them, prepare credit files, determine, okay, what are the real client's needs? Am I on top of all the activities that all my relationships I'm responsible for? Do I actually know what they're up to? Am I meeting all their needs? That's something that generative AI can help on, and there's lots of promising ideas in that.
I agree with that. I think commercial officers are expensive, Alan Hans, and they kind of like the art form. If I'm in my office working on the credit memo, we saw Numerated sell to Moody's this week, and I think one of them was the fact they were really leaning into generative AI for the credit memo, using some of their more quantitative data as well. So that is a great place to look in banking, not to get rid of officers, but to double their portfolio with a robot attached to them.
Yeah, and if you think about the way you would get information, typically, you'd say, "Let me take you out to lunch," and then you would get updates from the customer, and I could go in 1,000 times better prepared for that with AI tools, and sales efficiency is another example, something where I think there's lots of companies out looking at ways to make that more efficient.
Well, as you two are talking, I'm just jotting a few notes down, and you're talking about data and the customer, and really having a better sense of where they are and what you might do for them. So it kind of bleeds into another topic around embedded finance. Over the next 5 to 10 years, it really does seem that anything analog will be digitized, which again is a theme that I've heard you and Nigel talk about. So, as it does, institutions can capture data that no one else can really get their arms around. So you're talking transaction data that others can't see like a bank does. So I've got to, pull in the Sex Pistols and their Anarchy in the UK for this one, because I don't know what I want, but I know how to get it. And I feel like bankers keep hearing about the promise of embedded finance. And Steve, I think you had a question around embedded finance for Hans.
Yeah, I guess you're in the flow of money and investing in hypothesis all day long, and given that we see the potential of embedded finance to add value because it's low friction, it's personalized data, it's in an integrated ecosystem. Is it pound for pound? Do you think embedded finance will be a net loss of shareholder value to traditional banks, or will partnering or creating lines of business around this actually be a net gain for the banking industry?
I think that's somewhat up to them. I mean, and when I talk to bankers, I say every single business vertical, and even if you take healthcare, it's probably 100 different verticals within healthcare. So it's like providers, but it's also pharma, and then it's big pharma, and it's specialty pharma, and there's like so many different business processes around that. And what we look for is that there is often some new SaaS software company, because really everything's become cloud-based. I mean, almost every, in fact, operating system is converting to a cloud-based offering. And what is going to be the financial operating system in the leading cloud-based offering for that vertical? And it may be thousands of different software companies that do that. And if I was giving advice to a bank, I'd say, well, what are your areas of business specialization today? And if, let's say, you are a big lender to, various philanthropies and cultural organizations. Like that's a niche you have in a certain community, and expanded beyond that. So now you're doing it for a broader group because you got some really good expertise in it and great referrals. Okay, well, that's a good example. There's a whole bunch of things that those entities could use, and you should be the ones that say, I want to embed that into your ticketing software. We want to create the ability to offer a way of just adding in a button where you press and you automatically make your annual donations through that same thing, and it's automated for you. You don't have to do anything. We provide all your receipts right here in this one place.
Right.
I'm just making that up, but I would say, what if I was a bank CEO? I would be talking to my specialty commercial group to say, who are the key software companies? What are the leading new cloud-based offerings? How can we work with them to embed factoring, short-term financing, payments, credit, longer-term credit products potentially, things like can we offer payroll solutions right in that app to those companies? What insurance products can we create? And even things like we have a company, Grit, which is offering earned wage access to lots of companies. So you have employers and say, okay, they need earned wage access. How about an embedded wealth product for a higher end employee base? So I'd say it's focus on where you already have a competitive edge, but you should be absolutely focusing on how you can build smart programmable applications into that.
Yeah. It strikes me, Al, when Hans is talking, that to do that, our banks are going to have to figure out where that takes place, because it's kind of stuck between IT, the credit group, the treasury management group, and it kind of goes back to something Brent Beardall talked about, creating a product group that can bring this together and create product solutions to deliver to customers.
Yeah, and some of these are very simple. They already have APIs in some cases. They have SDKs built, so it's very simple in some cases for the business partner, your customer, to basically just download something, incorporate into some other software that they have. And there's some, I don't know if you know the company April, which is automated tax prep, but that's like a button. It's like, I don't know why every bank doesn't say, we offer to all of our small businesses, do tax prep, press this button, it's embedded into your banking app or in some other operating system, as I was saying, that all those companies in a vertical use.
Yes, Steve, as you and Hans are talking, I'm an optimist, so this is an unfamiliar territory for me to venture into, but I also see the challenges that might exist in terms of fraud and real-time risk management. So with like total apologies to the New York Dolls and their song Personality Crisis, total apology, because they did not want this to be used for commercial purposes like this. But, let's hear what you have to say about fraud and real-time risk management, Hans.
Well, I love a fraud company. I think, it's all of the changes to payments networks and other tools which enable payments to be real time obviously creates a lot of risk. And the friction that you had with 2-day settlement gave you the opportunity to check things, and now you don't. And many applications are batch, and so all that has to be rebuilt. And same thing with the corporates. Like a lot of their ERP systems are batch, like large corporates, SAP batch systems. So you want to be able to reconcile cash real time, and also be able to assess payment risk real time. And the nature of the fraud continues to get compounds at a rapid rate, and they don't have any of the requirements that banks have to test your software for a long period, and you don't have a regulator ensuring that you're putting it in production, that you check lots of things, and that you're
right.
Often, if your fraud tool may add a lot of friction, and may not be, may upset customers or may bias against certain customers. And so those things don't really matter to fraudsters. They really will just put things out into production.
I imagine, Hans, these fraudsters in agile development class talking about speed to market, but you're saying they beat the banks, don't they?
Yes.
Exactly.
And it's also, there's a technique that was originally developed, I believe, for modeling infectious diseases, which is called agent-based modeling. So it requires unbelievable computational power, but it's also how you see an asteroid, will it hit, what's the path of an asteroid? And so it's got all kinds of huge applications, important applications in science, but it requires tremendous amount of computing power, because what you do is you model how every agent, every participant in the system reacts to activity of every other agent in the system. So if you have an infectious disease and I walk into the house with you, do you get sick, or what actions do you take? Do you stop meeting with people as this spreads? So you model all this. Very good application in fraud, because the thing is, whatever protections I put into place in my institution, which may block, maybe a very good signal that blocks a certain type of fraud, the fraud just mutates in response. And they will go attack weaker institutions that don't have that, or they will come up with some other new thing which exploits another problem that I have. So I also, we have given this quite a bit of thought. We have some very good companies in our portfolio that are focused on fraud, and that includes Centrelink, which is used for account origination primarily, and account takeover, first-party fraud, and very a great company, actually very smart, and I think changing and keep adding new products and have a lot of confidence from their clients. Sardine is another company that focus on a lot of payment fraud applications. And then another company, Alteria, which, interesting, came from, it's going to bring up another theme, but they came from the crypto world, as did Sardine initially, which is, there's a lot of, bad actors in the crypto world. So seeing the activity of those bad actors and then being able to model, create signals from that. Alteria is focusing on scams as a very, very good, promising scam product. But we actually like thinking about what you really want to have, which is almost everything is point solutions in fraud. I've got card not present fraud is completely different from HR fraud, for example, and it's completely different from account origination fraud or from AML screening or transaction screening. They're all different systems, but in fact, what you would like to do is see the signals and have a graph from all this activity. And we see the convergence of fraud, AML, cyber, and crypto. Because a lot of the bad actors transact on crypto now, and that has become a giant volume business. And a lot of the cyber signals, the state actors and other associated groups, those are people who are also doing AML and other fraudulent activity and trying to wash money through the system. So who can create that, and what would that really look like? And that's something that we're intrigued by. So I think this is going to be the story of the next, a while, maybe forever. Right. I also like pointing out we have two other companies. One is Findigs, which is tenant screening. And that is also changing rapidly, because it used to be tenant screening. All you cared about was, I need your social security number, I need a credit report, I need an employment verification, and I need a criminal background check. That's it. I really don't care. I didn't care about anything else. I do those. I've given you your tenant screening, and the landlords are happy. There are criminal gangs that will offer to, if you pay them, like $10,000, they will create a synthetic identity and allow you to stay rent free in Los Angeles, because they can't evict you for 2 years. So for the next few years, you have to make a single payment on a $4,000 a month apartment.
Yeah. All right. So Hans has given us just like a wealth of ideas and information, and I love that you're bringing some real life examples of companies that are doing some cool things, that can help strengthen one's position. So I'm going to wrap this up. And I'm not sure if I want to go with the Stooges give me nature, or if I want to have the Ramones just put me in a wheelchair and get me to the show. But I got to ask you, we got holidays coming up. What wine is appropriate to give as a gift to either friends or family members that may not be as much of a connoisseur as you are. Any off-the-cuff suggestions that you could bring that it's not just a Pinot or a Chardonnay?
Yeah, I like, as you know, I'm a good, value type person, and so I like picking regions that are out of favor and people haven't heard of. And the one I think is just a really good deal right now is white Bordeaux, which is mainly Sauvignon Blanc, but it's also usually blended with other grapes. And there's just like excellent producers, just top tier producers you can buy for $50 a bottle. And to me, it's much better than, the high end California whites, which are now, 80 to 100.
Like $300.
Yeah. And it's, they're so good. And so I think if you go into a wine store, say, I'd like a really nice white Bordeaux for $50. A good wine store, they will come up with some. I could give you some producers, but anyway, that's to me an example of a really good deal right now, and it's a treat when you get it. Similarly, I think like sweet wines, and there's lots of them, but those are also a treat when you bring one to someone and they're really, you can spend a lot of money on like Chateau Yquem, but you can get some fantastic ones.
Chateau Couttet.
Yes.
Wonderful Sauterne.
In Barsac, and there's all these other regions. So anyway, and actually, Van Santo, if you never had that Tuscan.
I'll have to check it out.
Oh, Van Santo is absolutely, it just, it's impossible to drink it and not feel better about yourself.
Well, that's what we need. We need to feel better.
Some white Bordeaux.
Steve, when I see you again, I'm going to bring a $50 or less bottle of white Bordeaux so that we can toast to this episode and all of the others that we've had on Cornerstone. So I just want to take a quick second. Thanks, Steve Williams. Thanks, Hans Morris. And again, thanks to everyone who's listening in for Cornerstone and getting plugged in with us today.